Good morning, and welcome to another edition of Macro Now, set to be released every Monday morning. Today is Monday, February 8th, 2021. My name is Alexander Turro, Senior Market Strategist here at RJO Futures, where we contextualize the rates of change of growth and inflation, not only here domestically, but globally as well within the context of the prior week. So with that said, we'll start with the global currency market. You had the US dollar index having a counter trend bounce of plus 0.5% last week, taking its 3-month drawdown down to minus 1.6% as it continues to signal bearish on a 90-day trend duration. You have the euro versus the US dollar correcting minus 0.7% last week to now plus 1.9% in the last 3 months as it continues to signal bullish on a 90-day trend duration. You have the Japanese yen versus the US dollar down minus 0.6% on the week last week as it continues to signal neutral trend. And then you have the British pound versus the US dollar up another 0.2% last week to now plus 4.5% in the last 3 months as it continues to signal bullish on a 90-day trend duration as well. And so the most obvious investable full cycle pivot that you could have made back in June was long inflation accelerating as you continue to take a look at the CRB index, which inflated another 4.1% last week to now plus 21.6% in the last 3 months as it continues to make a new cycle high this morning. Breaking that down further, you have WTI oil inflating another 8.9% last week to a new cycle high of plus 42.6% in the last 3 months. You have corn inflating another 0.4% last week to 32.2% in the last 3 months. And you take a look at something like lumber, that inflated another 3.2% last week to now plus 72.7% in the last 3 months as well. And as you want to, in terms of continuing to be long that inflation in both commodity and equity terms, you have energy stocks inflating 8.2% last week to a leading 43.9% in the last 3 months. Then you have the small caps, the Russell 2000, that inflated another 7.7% last week to a new all-time high of 34.5% in the last 3 months. So in terms of fixed income asset allocation terms, you do have high yield OAS spreads tanking another 29 basis points last week to now minus 103 basis points in the last 3 months. You have the 10-year yield in turn ramping up another 10 basis points to a new cycle high of 40 basis points in the last 3 months. And you have the yield curve steepening another 11 basis points on the 10s, 2s, steepening 44 basis points in the last 3 months. In terms of a factor exposure perspective in U.S. equities, you had high beta stocks up another 8.0% last week to plus 35.2% in the last 3 months. Sales growth in terms of the top 25% of stocks were up 7.3% to 27.1% in the last 3 months. And you have EPS growth, again, top 25% of stocks up 6.5% to plus 26.0% in the last 3 months. And so the bottom line here is you want to continue to have a data-driven process in your decision making as you have inflation and earnings continue to accelerate as the numbers continue to drive the narrative and not the other way around. So with that, if you have any questions or would like to follow up, please feel free to reach out to me directly. Otherwise, thank you for listening and keep your head up out there.